If you're over 60 in Canada right now, there is money owed to you that you are probably not getting. And by the end of this video, you are going to know exactly what it is and exactly what to do about it. I need you to hit subscribe right now, before we even get started, because what I'm about to walk you through is the kind of information that Service Canada is not going to mail you a letter about, and you deserve to know it before another payment cycle goes by without you. I know what it's like to sit down with your bank statement every month and do the math over and over, hoping it comes out a little different this time. I know the feeling of watching the price of groceries climb while your pension seems to crawl. You worked 30, 40, maybe 50 years. You paid into this system every single paycheck without ever really being asked if you agreed to the terms. And now, when it's finally your turn to collect what you're owed, the system hands you a stack of forms, a maze of acronyms, and a phone line that puts you on hold for 2 hours. That's not fair, and you know it. And honestly, so do I. You are not confused because you're not smart enough to understand this. You're confused because this system was never built to be understood. It was built to be complicated enough that people give up and leave money on the table. We're not going to let that happen to you today. Here's something most seniors watching this don't know, and it could be affecting the exact amount landing in your account right now, this month. There is a specific date, a specific quarterly review that determines whether your old age security payment goes up, stays flat, or in rare cases even shifts based on inflation numbers you've never even heard reported on the news. Most people assume their pension just increases a little every year, like clockwork, matching the cost of living. But the truth is more complicated than that, and if you don't understand how it actually works, you could be quietly losing ground every single quarter without realizing it. I'll walk you through exactly how that works in a few minutes, and trust me, once you hear it, you'll want to check your own payment history immediately. Let's start with the foundation, because you deserve to actually understand this instead of just being told numbers. Old Age Security, or OAS, is not something you paid into directly, like an insurance policy. It's a monthly payment funded by general government revenue, and it's available to almost every Canadian senior who's lived here long enough, regardless of whether you worked a single day in your life. If you're 65 to 74, your maximum monthly OAS is now sitting just above $750. If you're 75 or older, you get a permanent boost on top of that, pushing your maximum past $827 a month. That boost for seniors 75 and up isn't a one-time bonus either. It's baked into your payment for life once you hit that age, because the government finally acknowledged something seniors have known forever, which is that the cost of living doesn't get easier the older you get. It gets harder. Health costs go up, mobility needs go up, and loneliness has a price tag too, even if nobody likes to say that part out loud. Now, here's where it gets important, and this is the part I really need you to pay attention to. OAS is reviewed 4 times a year, every quarter, and it's adjusted based on something called the Consumer Price Index, which is just a fancy way of measuring how much everyday things cost across the country. Sounds good on paper, right? Except here's the catch that almost nobody explains to seniors clearly. The Consumer Price Index measures a big basket of goods across the whole population. Things like electronics, cars, and clothing trends that mostly affect younger working families. It does not weigh things the way a senior on a fixed income actually spends money. Things like prescription medication, home heating, and basic groceries. The stuff that's been getting more expensive faster than almost anything else. So when you hear that OAS went up 1.2% this quarter, and it did, that's real, that's happening right now heading into this summer, it can still feel like it's not keeping pace with your actual bills. That's not you doing something wrong. That's a structural gap in how the system measures your reality versus your recipe drawer. You still with me? Good, because I promised you there was money on the table, and here's a big piece of it. Have you ever heard of the OAS recovery tax? Most people call it the clawback, and it terrifies seniors who don't understand it, mostly because nobody bothers to explain who it actually applies to. Here's the truth. This only kicks in if your individual net income crosses a fairly high threshold, and for the period covering this July through next June, that threshold sits above $93,000 a year. If your income is below that, and for the overwhelming majority of seniors watching this video right now, it is, the clawback does not touch you. Not $1. But here's what almost nobody tells people, and it's the kind of thing that could genuinely change your financial picture. If you're close to that threshold, certain decisions, like when you cash out an RRSP, when you sell an investment property, or even how you time your CPP, can push your income over that line temporarily and trigger a partial clawback you didn't see coming. A little planning, sometimes with a free consultation through a settlement worker or a not-for-profit senior services group, can protect thousands of dollars a year. That is not something your bank teller is going to bring up with you on a Tuesday afternoon. Now let's talk about the Canada Pension Plan, because this is where I see more seniors lose money than almost anywhere else. And it happens because of one simple decision that most people don't realize is permanent. You can start CPP as early as 60 or as late as 70. Most Canadians started around 65 without really thinking it through, because that's just the number everybody expects. But here's the part that changes everything. Every single month you delay past 65, your CPP payment increases permanently for the rest of your life. Delay all the way to 70, and your monthly payment could be up to 42% higher than if you'd started at 65. 42% for life. On the flip side, if you start early at 60, your payment is permanently reduced by as much as 36% compared to waiting until 65. That is not a small detail buried in fine print. That is potentially hundreds of dollars a month, every month, for the rest of your life, decided by one choice that a lot of people made without anyone sitting them down and explaining the real math. If you're already collecting and started early, don't panic. That decision's made, and there are still other ways to strengthen your income. But if you haven't started yet, or you have a spouse who hasn't, this is the conversation you need to have before you touch that application. Here's a curiosity loop I want to open up for you right now, because there is a benefit sitting inside the Canada Pension Plan that widowed and separated seniors miss constantly. And it is genuinely one of the most underclaimed pieces of money in the entire system. I'm going to come back to it in just a moment, but I want you to sit with this question first. If your spouse passed away, or if your marriage ended after years together, do you actually know what you might still be entitled to from their CPP contributions? Most people assume the answer is nothing, that once the relationship changes, the benefit disappears with it. That assumption is costing people real money, and I promise you, the answer is going to surprise you. Let's also talk about the Guaranteed Income Supplement, because if you're a lower-income senior, this is where the real safety net lives, and it is shockingly underused. GIS is a non-taxable monthly payment on top of your OAS, designed specifically for seniors whose income is limited. Right now, the maximum for a single senior sits above $1,100 a month. $1,100 on top of your regular OAS. For a lot of people, that's the difference between choosing between medication and groceries and not having to choose at all. But here's the frustrating part, and I want you to really hear this. GIS is not always automatic. Some seniors get automatically enrolled after filing their taxes, but plenty of people fall through the cracks, especially if their income has changed recently, if they missed a tax filing year, or if they simply never applied because nobody told them they qualified. If you have not filed your taxes recently, even if you think you owe nothing or have very little income, file them anyway, because that tax return is often the trigger that unlocks GIS eligibility. I have heard from seniors who left thousands of dollars unclaimed for years simply because they assumed a form got sent automatically when it never did. And if you're between 60 and 64, there's a program almost nobody talks about called The Allowance, and its companion, The Allowance for the Survivor. These exist specifically for that awkward gap of years before you turn 65 and become eligible for OAS on your own. If your spouse is a low-income OAS and GIS recipient, and you're in that 60 to 64 age range, the allowance can provide real monthly support, so you're not left financially stranded in that gap. And if you lost a spouse and you're in that same age range with limited income, the allowance for the survivor exists specifically to bridge that gap until your own OAS eligibility kicks in. These programs exist because the government recognized this gap causes real hardship, and yet I still talk to seniors in their early 60s who have never once heard these programs mentioned to them. Now, let's go back to that promise I made you about CPP survivor benefits and credit splitting, because this is the payoff, and I think you're going to feel a mix of relief and, honestly, a little bit of frustration once you hear it. If your spouse or common law partner passes away, you may be entitled to a CPP survivor's pension, calculated based on their contributions. And in many cases, you can receive this in addition to your own CPP retirement pension, up to a combined maximum. Too many widowed seniors never apply because they assume their spouse's CPP simply ends when they pass, full stop. It does not automatically end for you, but it is also not automatic that you receive it either. You generally have to apply. That single phone call or online application to Service Canada can restore hundreds of dollars a month that a grieving family didn't even know they were entitled to.
And here's the piece that genuinely surprises people the most: credit splitting. If you went through a separation or divorce, even years or decades ago, you may be entitled to have your former spouse's CPP contributions during the years you were together divided equally between both of your records. This is called credit splitting, and it exists specifically to protect the spouse, often a woman who stepped back from paid work to raise a family or support a household, who otherwise ends up with a smaller CPP because their name wasn't the one directly earning during those years. This isn't a favor the government does you. It is something you are entitled to request, and yet an enormous number of divorced and separated seniors never apply for it, simply because nobody ever told them it existed. If you went through a separation, even one that ended amicably decades ago, this is worth a phone call to Service Canada today. Not next month, today.
I also want to open one more loop before we wrap up, because there have been real changes to these programs recently that are directly affecting what lands in your account this summer, and most seniors have no idea it happened. New quarterly adjustments, a newly restructured federal benefit replacing the old GST credit with a bigger quarterly payment specifically aimed at helping with groceries and everyday essentials, and updated income thresholds are all rolling out right now, this July, changing what a lot of seniors are eligible for compared to just a few months ago. I'm going to give you the honest picture of what that means for you in a moment, because I don't want you hearing partial information from a headline and assuming it applies to you when it might not, or missing out on something that absolutely does.
Here's the straightforward truth about what's changing this summer. Starting this July, a newer benefit began replacing the old GST credit system, paid out quarterly and specifically designed to help with the rising cost of groceries and household essentials. For a single senior with a modest income, this can mean a meaningful annual boost on top of what you were already receiving, arriving automatically as long as you filed your taxes. On top of that, this quarter's OAS adjustment is the largest single increase of the year so far, a real 1.2% bump landing this month. None of this is life-changing money on its own, I won't pretend it is, but layered together, an OAS bump, a GIS top-up if you qualify, a quarterly grocery benefit, a possible survivor pension you never claimed, credit splitting from years ago, and correctly timed CPP, this can add up to real, meaningful monthly relief that a lot of seniors are simply not receiving because nobody laid it out for them in one place.
Here's what I need you to walk away with today. You did not spend your entire working life paying into these systems just to quietly accept whatever shows up in your account without question. You earned every single one of these benefits through decades of work, decades of contributions, decades of raising families and building this country. You deserve every dollar that belongs to you, not because you're asking for a favor, but because you already paid for it years ago, in advance. If anything in this video made you pause, made you think, wait, does that apply to me? I want you to actually follow up on it this week, not someday, this week. Call Service Canada, visit an in-person office if you can, or reach out to a local senior services organization who can walk through your specific situation with you for free.
And if this video helped you understand even one thing you didn't know before, I need you to do two things for me. Subscribe to this channel, because I am going to keep bringing you the real, honest breakdowns of what's changing with your pension, your benefits, and your money. The things that actually affect your life, not just the headlines. And second, please share this with your spouse, your sister, your neighbor down the hall. Anyone in your life over 60 who might be sitting on money they don't know they're entitled to. You watching this today might be the reason someone you love finally gets the payment they've been missing for years. That's not a small thing. That's real money.
in real pockets for people who earned it the hard way. Take care of yourself, take care of the people you love, and I will see you in the next one.